Hello everyone and welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you guys. It is Wednesday, November 4th. Lots going on. We just did get the release for the trade balance figures in the United States coming out slightly tighter than expected, so a little bit of an improvement. Negative 1.75 billion is what we were expecting, came in at negative 1.73. Nonetheless, here's what the relative performance looks like so far to open this session. You do have a dollar with a little bit of a rebound here. The initial rebound and the break of this near-term upper median line parallel was charged just now, 15 minutes earlier, by the release of the ADP employment report. Came in at 182,000, slightly higher than 180 expected. So all focus now shifts to the more encompassing NFP report on Friday. And again, on that release, let's see what the consensus is, if it has changed. Looks like we're still looking for a print of 182,000 there as well. So there's what the expectation looks like heading into the NFPs on Friday. Relative performance of the greenback, you see it stronger against most of its major counterparts here today, save the Swissy, slight hold there at 0.05, but the biggest mover here was Kiwi Dollar, down 0.9%. We'll definitely take a look at that. Kiwi Yen is what I highlighted on yesterday's radar chart, is the preferred pair in my mind for the Kiwi decline here, but we'll cover Kiwi Dollar as well. Euro Oz, we'll talk about that. Came into some support. It's coming into some support now, rather. A nice reversal in Aussie, which we were involved in, Aussie Kiwi. And then we'll take a look at the radar chart. So let's jump right in. As always, guys, questions, trade setups you'd like to review, always feel free. So looking at the dollar index, here's what we highlighted yesterday. The reversal that we got yesterday, if you guys remember in the webinar, we were talking about 1266 into 1271. That was the previous day's radar chart, and he had highlighted there 50% retracement of that move. We actually came right into that and reversed early in the US trade session yesterday. And the pullback, again, took us right back within the initial weekly opening range. Here's what looks like it could be a near-term break of the upper median line parallel. Again, we didn't get too many reversals off this, so I don't want to stress this formation. In fact, it wasn't even highlighted on the Tuesday chart here. Last night, here's what we look like. So if we do break to the top side, as we noted, as long as we hold 1271, 1274, the thing's at risk. If it breaks above that region, it's a 618 retracement off the high and would sort of validate a break of the initial weekly opening range here. You'd look for a tag of that former trendline support off the lows, and that can take you as high as like 1290, 1291. So key levels here for the dollar as you head into NFP, ideal scenario or foreseen scenarios that you start to see some resistance again here towards that 1270, 1273 level. So what does that mean for the dollar crosses that we've been following? Most of the play, but the best setups have actually been away from the dollar crosses on some of these other crosses, Euro Oz, Aussie Kiwi CAD. But for the dollar, it means you might open up the session with a little bit more of an upstretch. You'd look for the same type of scenario that we were looking at yesterday. Here's where we were when the webinar opened yesterday. When we were talking about looking for a stretch higher to possibly sell. It's exactly what you got. This prompted a really nice position on the long side of Aussie. We'll go over that in a moment. And the pullback here, again, momentum still holding above 40. The momentum signature in general still remains constructive from the start of the week. You haven't gotten any 40 breaks, save this one decline here. But multiple spreads above 60, and here's multiple turns ahead of 40. All right. So let's jump into the intraday update from yesterday, and then we'll come back and check out the Aussie Yen and Kiwi CAD. Here's what the intraday update looked like. So first up on deck was Euro Oz. This is one that was highlighted the previous day as well. We've been following this one really clean, too clean for comfort actually. But the daily chart looked like this, a broader ML formation off the highs, continued to shift the focus to the downside. You're looking for a stretch essentially into that 5130 level, which we're coming up on. And as long as you stay below the median line, you're looking lower in the pair. Here's what the intraday chart looked like last night. Sliding parallel caught those rallies in U.S. trade. Again, really nice movements here against the median lines. You're looking for targets at 52.16 and 51.65. Okay, you've taken out one of them. You're coming into that second one, which is basically the previous low. Here's what Aussie Key, or Euro Oz rather, looks like now. All right, so you did see that resistance hold. You took out those first two targets, and again, confluence support, what we highlighted, sort of charging a little bit more of a recovery. If we already got a trigger break to the upside, so if this thing maxes and breaks through that median line, expect a little bit more of a recovery towards the upper median line parallel. And again, there, we shift the focus back to the downside again, starting to look for some shorts. But at this point, you're checking resistance. If the US opening range opens with a break to the downside, you're looking for, again, the same target, 51.65, and then down to 51.30. Keep in mind, a quarter of the ATR here is actually a little bit bigger at 48 pips, so play these levels accordingly. I would still be doing something, shaving off something, bringing stops to break even on each target. A quick relook at the levels also offers us a little bit of a change here. We got to take that new low into account. So we're going to go ahead and drop that to the new low and now drop the bearish invalidation level to that 38.2 over there at 53.10. Okay, nice pivot in price. So you're at near-term resistance to start off the session. You're looking for short triggers. Again, if it breaks the highs for Europe, look for that rally into 52.71, 53.10, and this is where we'd start to shift our focus back to the short side for Euro Oz. Nice play. Also coincides really nicely with a little bit of an Aussie give back. Aussie's had a nice stretch. We're out of the long side on Aussie. I'll go over that next. But just really impressive how it's holding these levels here for Euro Oz. On the downside, by the way, if we do make a stretch here past 50 with 130, the next target is quite a ways away. From the daily standpoint, you're looking for a drop into like 49.50. Nice confluence region there of the lower median line parallel of the descending embedded structure, as well as the broader structure we've been in. And not only that, this would be like what's the word? A measured move, right? For the double, triple top, whatever you want to call it, break. A measured move of that top side stretch, 200% extension gives you 49.51. So the potential here for a larger drop in Euro Aussie is definitely there. Near term, though, momentum is at 40. We haven't seen a 40 break since, was that March? Yeah, March was the last time we were below 40. So you'd expect to see a little bit more of some firming up of the resistance here, at least from a momentum standpoint, with really a break above that median line of that resistance trigger needed to shift the focus back higher. Clean setup here for Euro Oz. And if we take a look at the 5-minute, guys, you can see the momentum signature start continuing to remain pretty constructive off that low. So on that rally, you can see most of the pullbacks found support more or less around 40. Multiple breaks into overbought territory looks good as well. So I would be looking, you did get some divergence on these last two highs, but here's a trigger to the upside. This is a 1-minute chart, by the way. I'd be considering, depending on timing, again, we want that to break on the US opening range, but if we do move above the highs here, could see stretch right back into that 52.70 level. Any questions on Euro Oz before we move off? Still one of my preferred pairs. I like the Aussie crosses in general, if you can't tell by the updates lately, but that is Euro Oz. Okay, next up on tap is the Aussie Dollar, and this one we kind of lucked out with. The entries were beautiful on it. Right after the US Open, here's what Aussie Dollar looks like on the daily chart. We came into the 72 handle. Recall the report from Monday, guys, or the Sunday night report, rather. We were highlighting the fact that this is a major key range of resistance at 72.02 into 71.77. We really need to clear that on a closed basis to get the validation for the broader turn off that decline. We're not getting it. It's failing up here. It looks like the pullback's going to give us a little bit more, but the rally certainly was a play that we were involved in. From here, here's what the Aussie looks like on the intraday. All right, so here's where we were when the U.S. markets opened yesterday. And we were sitting right on that former sliding parallel off the highs for this formation. Let me just zoom that out for you. From the October highs. Basic trendline resistance was the same exact slope, okay? You broke, testing it as support, momentum was just above 40. So heading into the US session, I was already looking for a long trigger. Just so happens on a 5-minute, there was a really compelling trigger on the rebound off that region. We jumped into a long position, shaved off 20 pips, shaved off 40 pips, and then when we published last night, we had noted that we were still holding a long position from 71.50. We were half off and break even, looking for a topside stretch back into the next target, which was right here at 72.23. We were lucky. We literally just got limited out right at like 72.20 where I had the limit at. But long story short, on the rebound here, we came right back into that same level at 71.78, 71.80, and it held as support near term, even gave you a topside trigger. So there's another opportunity to get back on the long side for that trade. From here, we're holding these median lines very well. We've completed a 50% retracement. And on this break here, you're likely to see a little bit more of a drip towards 71.52. Long story short, the trade remains constructive above 71.30. So we'll look for this drawback here to give us another opportunity to get back on the long side. Here's what the 5-minute chart looked like, by the way, for Aussie. Oh, well, this is the 1 minute, but you can see that was the dip that you saw even on the near term. Okay, just tack on some near term trend lines. Basic median lines can give you some tell into what's happening in the broader picture, or in the more near term picture, I should say. So again, into the lows, you had a really nice, compelling divergence in momentum. And on that fact alone, you were testing also, this was a fresh low for London. You jump into the position. Again, it doesn't show you the exits for yesterday, guys. Obviously, MarketScope doesn't do that for previous days, but there was an exit right here at 20 pips, and there was an exit here at 40. And here's when I thought the market was going to turn over. And here's a quick lesson, actually. This is something that you guys could probably use. So you jump into something called a synthetic hedge. I don't want to get into too much don't want to stress it too much, but it can be helpful sometimes when you're wondering, or the risk rather of a trade turning over is there. Into the highs, you saw some divergence. The same signal that put us long on the trigger break, you're seeing it now in the highs. So I'm thinking this thing could turn over. I've already taken off half the trade, and my stop is at break even, but this might be an opportunity to take a short position. So what do? So the Aussie yen actually represented a very similar setup in that it was pretty much the same structure off the initial advance. And the Aussie yen was coming off a nice near-term resistance level in price as well. So the way I decided to play this is it's called a synthetic hedge. You can do it a couple of different ways with a couple of different pairs. But basically, I took a short against that position, really tight stop, just against the highs, 13 pips, smaller position. But this way, if the market came back, the profit loss here would be offset by some of the gains we're making here. If it continues, I eat a 13 pip move, no big deal. I got an extra 26 pips on that last stretch. So it's a way of sort of covering your risk a little bit while opening the opportunity. Listen, if this thing had broken out or broken lower and taken me out at break even, this trade would have been well in the money, right? Again, it's a little bit more advanced. It takes a lot more sort of attention to your trading in your term, but sort of a little trick there. So as far as the Aussie is concerned, from here, expect a move lower, looking for some long triggers. If momentum breaks 40, which it looks like it's trying to do on this 30-minute candle, I'd be looking lower towards that 71.30 for entry before I start to do anything. That'd be the first 40 break for the week after some divergence into the highs. Not typically something you want to try to fight. But still, if you want to play the Aussie crosses, Aussie dollar at this point is a little bit off the menu for me. More interested in the Euro Aussie that we just went over, and Aussie Ki. That thing is insane. With the combination of the Kiwi losses, Kiwi's the biggest loser on the session, obviously. Really saw Aussie Kiwi go through the roof. So we'll take a look at that in a moment. Any questions here on Aussie dollar before we move off? All right, next up on tap from last night's update was the Aussie Kiwi. And here's what this looks like. So we highlighted this on the radar charts for Sunday. Yep, or it was Monday. As this thing was coming into basic support. Trendline support happened to be the same exact slope or a parallel of the broader structure. You saw a space right there, divergence into the lows again, and the break back above that key. This is a long-term 618 at 105.60, shifted the focus to the upside. So the initial major resistance was right here at what was that, 106.85. We blew right through it. I mean, this thing just exploded. So here's what it looked like subsequent. Here's the daily chart, and here's the intraday. So you came right through that 106.85 target. You sat there for a little bit into the close, but then you just exploded right through it. Looking for resistance last night, we were noting around 108.65. Beyond that, I mean, I really am not interested in looking to play the long side at this point. Remember, momentum was in overbought condition. This is not something that we want to fight and try to short, but at the same time, it does suggest things are getting kind of stretched, and you'd look for a reaction near resistance when something's in overbought. Here's what it looks like now. We're testing that region as we speak. Momentum's been giving you divergence into the lows. I'm just waiting on an entry here for a possible play to the shorts. Now, if you do play the short on this, we want to be light. We're not going to go in full leverage. If your typical trade size is X, you'd go in half X, maybe a little bit less, just because we're going counter trend, right? No one's going to fight. No one's going to say this is not in an uptrend near term. But we are at risk for a little bit more of a near-term pullback here. And guys, this isn't even a median line structure. These are basic parallels. If you just take that one support and you mirror it, you can see how the market has reacted to that slope. Resistance, break, instant support. It just so happened to be the exact same slope as those highs. Takes us into 108.65. So looking for a turnover in momentum, looking for a little bit more of a conviction turn so that we can try to play some shorts off this level. Inevitably, we'd be looking to buy the pullback back towards the median line off the lows from, what is that, October 22nd. So if you zoom this out, by the way, the scale chart's on there for you, by the way, but if you zoom this out, whoops, you can see the broader structure that we're in. It's super clean, super clean. So even if we break here, you're still looking at resistance closer by near like 109, 109.15, this region here. Okay, that's the upper median line parallel for the formation that we've been in for like 6 weeks. Really clean here on Aussie Key, finally making a move, looking for some resistance. Near term here, break higher, I'd be looking again near 109.20, 109.35. Sweet spot to get back on the longs to try to play this would be right over here. If we get a pullback towards 108.67, that median line off the lows, like I said, would be sort of a nice spot. You'd be able to play that confluence for a possible rebound higher. Definitely a change here. Definitely a change in what's going on. If you look at the momentum signature on the daily chart, that's as telling as you'll get a move. Okay, and this is the first directional break. If today does move higher, it's going to be the first directional break above 50 that in momentum that we've seen since way back here. Okay, and that charge in advance, that lasted for like another 5 or 6 days to the upside before it turned over. So just keep that in mind. Christopher, good to see you in the room, man. Says, Mike, good morning. Can you explain again how to get a copy of the trend line? Oh, so Chris, just hold down Control on your keyboard and click on the line that you want to copy. And it's just going to mirror it for you. So if that's the trend line you want to copy, hold down Control and then just click and drag. Click and drag. All right. Unfortunately, you can't do it with an actual median line structure. So if you're working with like a pitchfork like this, you can't copy those. But basic trend lines you can. Hope that helps, man. He says, okay, thank you. Anytime. All right, so any questions on Aussie Key before we move off? Tracking resistance here into the open of U.S. trade. The major critical resistance comes just higher at 109.10, 109.20. On the daily chart here, you can see the low day close highlighting 109.35. But broadly speaking, you're looking for this region here. Keep in mind, for those of you who have been on with us for a while, you know, this is the same slope we talked about. I think I might have talked about this in the webinar yesterday, so I don't want to repeat it, but off that 2014 low, it's the same slope. Okay, so you'd think a pullback here, that same slope would give us a little bit more of a support play, and you played along from that. From here, the immediate bias is at risk just below that trend line. And that's the same level in the near term of the rising trend line off the low. All right. Christopher says, Mike, in your opinion, is there really such a thing as stop hunting? Chris, yeah, there is, man. I worked on a brokerage on the backside, so I can tell you from experience, it's not something I necessarily want to like talk about too much. But look, Chris, this has no bearing on our trading, right? In futures market, and that's not really a secret, right? It's kind of just common knowledge. In futures markets, you can see open orders, you can see where the orders are stacked, where stocks are stacked, limits are stacked. On the brokerage side, back in the day when everyone was a dealing desk, we can also see all where there are huge stops. But the problem is not that that's not going to be something that a retailer is going to do. It's going to be something that the bigger institutional banks are doing. And irrespective, Chris, spending time and energy and thinking about that, I'm not picking on you, by the way, I'm just telling you my opinion, it kind of diverts from the analysis and from the trading. That's not something you'll ever be able to control. You do want to be mindful of key psychological barriers, which is why whenever I'm looking for a trade, if I'm looking to target the 153 handle, I'll put my limit at 152.96, 95. Forego the 4 pips, make sure you get filled. Let's keep it as much in our control as possible. If there's a big psychological 618 on like a 3-year chart that you saw advertised on CNBC, put your targets on the inside. Right? That's it. That's the only way that I would say that I try to address in my trading. Those psychological barriers, whether it's stop hunting or not, psychological barriers in general will generate a lot of volatility, and a lot of time the markets will turn right ahead of them or spike right through and then reverse. If you're talking about specific pairs, sterling's known to be an institutionally traded currency just like that. You see the throw over, the break of support and reversal all the time. So it's something the bigger players are doing out of our hands and doesn't necessarily want to affect my trading, right? So that's the best answer I can give you on that, Chris. Hope it helps, man. All right. Back to the charts. That is Aussie Kiwi from last night. If there are no other questions there, we will move on to the radar charts from last night. And, again, Kiwi Cat is my favorite setup from those three, but real quick look. Aussie Yen, we talked briefly about the near-term synthetic hedge. I tried to pull on that one, but the Aussie Key, wrong chart, looks like this, or the Aussie Yen looks like this. Last night we talked about this, and I actually tweeted this chart as we were testing this resistance level. So you have a nice confluence region here with 236 extension, not something we typically stress, but a real nice pivot in price in last week's opening range low. Came in, right in line with the 764 retracement of the basic pullback here. So you saw that rally max out. We pushed right through that. Again, this was another opportunity to take the short, and this was where the Aussie dollar sort of maxed out as well. So we're coming back, and all we're doing right now is checking that upper median line parallel as support. So I don't want to start getting too aggressive on the short side or thinking it's going to break down just yet. Also, momentum right at 40. This is what happened last time we checked 40 this week. All right, so a break lower from here, specifically if we take out the lows from Asia last night and a move sub 40, you'd expect to see a little bit more of a steeper recovery to the downside and we want to take into account. See if this gives us any overlap. Yep. So same thing, 86.47, 86.50 is sort of where you'd start to look for initial support, invalidation for the broader upside. It would still have to be around the 86 handle. Yeah, it would still need to be a break below this. So quick update on Aussie yen. Not really my favorite of the Aussie pairs that we've been covering, but that's what it looks like on the near term. Too steep. Yeah, I don't know if there's anything else for us on Aussie yen for us near term, just because of where we are in price. Not too far off the highs here, but we'll see if we offer some support. Any questions on Aussie yen? We'll go neutral on this one for now. The play was last night on the pullback here, or if it had materialized from here, that hedge would have been a nice play. Probably would have gotten stopped out of the Aussie dollar, but obviously we broke through. Chris says, I understand. Thanks. More than welcome, sir. All right, and that covers, we made good time today, all of the pairs that we talked about on yesterday's update. Last but not least was the Kiwi CAD, rather. So an interesting setup. Obviously on the back of what we've been seeing in the Kiwi Dollar. Well, I guess let's jump into the Kiwi Dollar first. Sorry to jump around, guys. Here's what Kiwi Dollar looks like on the daily chart. So look, the last ditch effort for support, and I wrote a piece on this yesterday on Daily FX. The last ditch effort, in my humble opinion, was that 66.40 barrier. Peace out for the Kiwi players here. I think that kind of solidifies a much more substantiated pullback. You're looking now at 65.65 as a near-term support target, but basically, that lower median line parallel comes in even lower, like 65.30. Momentum, this is the first directional break sub 50 that we're getting, since back here. Obviously, that was the onset of a major downtrend, but the risk is there for Kiwi to really start to fall apart here. Here's what it looks like on the intraday chart. And, oops. Here's the structure that we're trading within. So I hope this is not a little too messy here, but just to give you a picture, this is what we published yesterday on Daily FX. Again, the basic trendline resistance here was the sort of origin, rather. Excuse me, I don't lost of words today. The origin of the slope. So you see the parallels have been holding rather well. This was the parallel that we highlighted yesterday. Here's the break. There's really nothing below here. I mean, if you're not short already, I don't have a play for you, but there's that 65.65 barrier. It's like the next area of support. There's really nothing ahead of that. So you might see a little quiver here. 65.85, let's call it. But as far as getting a new position in, it's tough from here. Ideal scenario is that last night, that last pullback into support would have given us a little bit of a pop and an opportunity to get back on the short side. But from here, I think you got to wait this thing out. Looking lower. Soft target, that 65.85 target, but you're basically looking for that 50 at 65.65. Any questions on Kiwi Dollar? I know there's a lot of interest in this one because of all the data that we got this week. So with that view, oh damn, that had a really nice trigger on it too. With that view on the Kiwi, here's what Kiwi CAD looks like. So a way that we're looking to express some CAD strength, and that's another one, if you look at dollar CAD real quick, that's another one which kind of faked this out, came into a major support barrier again, that lower median line parallel for this formation. You had that 618, 50% retracement, kind of quivered below it again. Here we are with a little bit of a recovery, so we didn't get the break. If we do see this thing give us another rally towards this region, again, we'd be looking for possible short exposure. But with that view on the Kiwi and the CAD, here's Kiwi CAD. Okay, so we reversed off a huge region last month. This 89.25 into 89.38. We even saw a daily close above it. It was quickly, followed by a massive reversal day candle that came right into the median line, saw a rebound, tested the 200 again, and here's the break. Again, very similar scenario, but Kiwi CAD has a larger ATR of 122 pips. Here's what the intraday chart looks like. And here's Kiwi CAD last night. So again, we were coming right into the support barrier. This one gave you actually a decent entry on the pullback test of that lower median line parallel as resistance. Momentum held 40 as resistance. That's as strong a short signal as you'll get. And then again, initial targets at 86.55, 86.30. This completes 100 off the high. So I think for the Kiwi dollar, very similar. You'd look for a little bit of a stretch lower than a possible rebound higher. And that coincides, same thing with what we're looking at on the dollar index, right? Possibly stretch back into this region, maybe even that former trendline support before we turn over again. So the picture still works pretty well. Oops. And Kiwi CAD levels unchanged from yesterday's setup. So there's the first target, 86.57, second target, 86.26. Both of those basically way ahead of schedule, but we're here. And remember, we talk about this a lot too, the downside break of a descending structure, if it materializes and is legit, can sometimes be the sharpest part of the move. So just keep that in mind. Subsequent to here, you're looking at 85.75, much bigger move. Christopher, let me see what you're saying here. Says, last night my strat was to short Kiwi by long dollar CAD. Okay. Looked like it may hold support, so I moved my stop on dollar CAD above the low by 4 pips and got stopped out of a long. That's why I asked about hunting. Price recovered quickly and the trade looks great now. Rookie move, putting the stop above lows while that close in price. Yeah, and here's the thing. What do I want to say about that? I hear you, Chris. I've been right there before, many, many times. It takes some time just to kind of feel out the market. He says, yeah, I know, man. Don't be so quick. When you jump into the position, guys, a lot of times I like just to walk away from the desk once I've done it, or move into a different pair, or do something. And if your stop, if you have to stretch your ATR or your limit, or you're gonna kind of offset your risk to reward to make that stop get out a little further out, then you need to work on a better entry a little bit. That's whenever you're running into these scenarios, it's one of two things: either the entry is off, or your stops are too tight. It's very, very simple. And if your stops are too tight, it's either because your entry's off or the trigger that you're using to get into the market is kind of a little skewed. But yeah, Chris, specifically around big round figures, psychological barriers, major long-term moving averages, you'll see a lot of that happening. So just keep that in mind. Chris says it's just frustrating. Actually, it wasn't a good question. It's a flaw in technique. Nothing with the market. No boogeyman there. Yeah, Chris. I mean, again, it's something that it's whether it happens or not, the market is doing what the market's doing, and the best thing we can do is just kind of prepare ourselves and make sure that we're using caution, and I don't even want to say caution. It's just good risk management. Stops on the inside, or stops on the outside, limits on the inside. And that's the way you want to play it. You want to put your stop a little bit beyond where it needs to go and your limit a little bit ahead of where it needs to go. If that doesn't fit into the risk to reward ratio, from where you're taking the entry, then trade doesn't work. Gotta look for somewhere else. All right, so those are the major setups that we've been following. We'll give you an update later today, again, obviously, on which ones of these are sort of still in play. As far as some of the other trades that are going around, just a quick look around the clock of what's some major themes moving in the market. Obviously, I'm sure everyone's heard about the complete massacre in gold that you've seen over the last 3 weeks. Ran into that 52-week moving average after it looked like it was going to make a really decent advance. This kind of puts a hole in everything. So you'd look a little bit lower for some support here on the gold trade. Here's the weekly chart. This is the daily chart. You can see all kinds of support being broken. Kind of nothing even held. Here's the November open. Let's kind of flag that here. And here's what, more interestingly even, here's what the 30-minute looks like. I was kind of messing around with this last night. So you saw the 88.6 catch the exact low, what is that, 11.14? 11.14.40. You look for some near-term resistance along that slope line, maybe up into 11.30, 11.27. But as long as you stay below this region, guys, there's doesn't look too good for gold. NFPs might be a nice catalyst for a move, specifically if the dollar pulls back more aggressively. It might offer this thing a little bit more of a recovery rally, reprieve for some of the sell-off, but there's been a lot of technical damage done. So keep that in view for gold. Taking a look also at crude prices. I don't know if you guys caught that chart from last week from Jamie on Bitcoins. Huge move there. The other one is sort of this crude chart that we've been following. Along with this, looking at what's happening in dollar CAD, you could be onto something here as well. So this was kind of a big break that we made yesterday, 50% retracement. More importantly, if you take into account that median line structure, which has held price all year long, really, really precisely, I might add, there's a break again. So I'd be looking for this upper median line parallel, possibly a rally back towards the 50 handle for crude. Eurodollar is breaking. Your view, please, says Bernard. 109. Sure, Bernard. Let's take a jump into euro. Really been off the focus for me for a while. I got nothing for this on a near-term setup, Bernard. Believe it or not. Typically a pair that we're all over. It's just this decline, the break, again, just continues to be at a really quick pace, although the momentum picture doesn't look like it's really following, so I can't really validate the broader turn yet. This is coming up on as a basic trendline support. So I don't want to sell at a 2-month low, and at the same time, the rebounds have been pitiful and really quickly to pull back. So here's what the intraday chart looks like, and this is sort of a 5-week span here. I guess there's still opportunity to get back on short scalps as far as the triggers are concerned. I just don't have any real concrete targets for you, Bernard. Okay, so one thing I'll note is the 100% extension comes in at 108.67. That's 100 off the high that we made on that August 24th stretch. Basically sitting at support at 109, which is a 786 retracement of the advance off the July lows. And again, watch the close today. Watch the close today. It's too close for me. And there's not really anything massively shaken from the Eurozone coming out this week. You do have sort of a jam-packed schedule today. You have Yellen, I think Dudley, and Fisher all on the mic in that order today. So you do have a lot of Fed speakers on tap ahead of the NFP print on Thursday. But from the Eurozone, I don't think you have anything crushing coming out. This is sort of a slow melt. I don't like these trades. I don't like these trades. If I really had to get involved, like I said, the Euro Oz setup that we covered first on top, Bernard would be my go-to I'd have to say, for the euro crosses. Again, hope that helps, Bernard. Wish I had a little bit more of a conviction for you on euro dollar, but I'm still on the bench here for the euro. Anytime, man. My pleasure. Mark says, came in late. Quick look at sterling yen, please. 187.40 looks good. Resistance. Sterling yen. Talked about this yesterday, right? You're talking about resistance where, Mark? 187.40. What are you looking at there? At 187.40. Let me see what the near-term chart looks like. So I have the high day close right around here. If you look at the high day close for September, the close of that session was 186.95. Kind of probed through that. We went as high as 187.20 or so, but here's the pullback. Today's close is going to be pretty big because that level actually coincides right on with that lower median line parallel. You want to have a stop against 188.40, he says, on a short side trade. So you're getting some divergence into the highs. That's a good signal. What's this level? This September high day close. Oh, that's the level we just talked about. Yeah, I mean, if you get an opening range break or if you get a decent trigger, especially below that, I actually would like that too. No doubt. Here's what the sterling looks like. I'm going to come right back to this, Mark, okay? Just want to show you what the sterling dollar looks like because this actually was a compelling chart that we've been following on SB. This we were following in this all last week. The beginning of the webinar earlier this week, we talked about this structure. We just kind of tacked it on. Still holding. Kind of impressive. I haven't traded this at all this week, but all the levels a little bit ahead of target, but all more or less are kind of like clockwork here. So I am looking for this thing to continue to teeter lower, or even give us a more meaningful turn lower. With a break below this is now what you'd look for to really open up the downside. And this is just a quick tack on from the Friday high, the Friday low, and then this week's opening range high. So it's interesting on the British pound. Again, the daily chart is all you need to know. It's all you need to know. It's just been holding super well here. So if we get a break above this, you'd look for that rally into 55 while holding below, which is basically the highs that we made for the last 2 days, the open for the week. The risk is for a little bit more of a pullback here. So representing that through sterling yen, I do like the dollar yen lower, although that's still been continuing to press higher. As we said yesterday, guys, the break above that initial invalidation level we talked about early in the week, I just don't want to short this yet from a scalping perspective. So still like the downside idea, but you just don't have the validation yet. And even on these last 3 peaks, still getting divergence. Lower high, lower high, lower high, right? So I'm hunting for it, but I just haven't gotten the trigger to really press the shorts on this more aggressively. So with that bias on looking for a peak turn in dollar yen, sterling also looking like it's ready to turn over. Sterling yen, I like the idea. I do like the idea. Mark says, maybe I should learn to wait for more confirmation. LOL, thank you. Hey, my pleasure, Mark. Nice setup. Good luck with that. I think look for that turn in momentum. I think you'll get it. Looks kind of tired, but it's been looking tired. I thought this resistance was going to hold, let alone here we are again now checking the September high day close. So definitely something to keep on the radar. John Fortune, great to see you in the room, sir, says, hey, do you think copper is coming into a good shorting area? Thanks. Haven't followed the copper trade too closely, but let's take a look. Here's a November open. I think it's in a range, and I think you play that range, or you wait for that range to break to get the validation for a broader turn, or you just play within the range. Let me just do some updating here. Hmm. So here's what I can tell you. Sorry that took so long. John saying, do you think copper's coming to a good shorting area? I can see us coming into a near-term resistance area, and if you take a look, that 50-day moving average, I'm not a big moving average guy, but sometimes it's stupid not to pay attention when the market is. And on a pair like this, you've seen it pivot off this 50-day moving average just over the last couple of months, like 4 times. Once, twice, 3 times. Resistance, break, support, break. Here you are testing it as resistance. So it depends on the type of trade you're getting in, John. If you're thinking about like a near-term pullback intraday, yeah, I really wouldn't bet too much higher than maybe that last session high from October. But near term, you might be at resistance. Momentum, typically at 50. You like to see a little bit of a pullback, a little bit of resistance, sure. An area of which I'd be much more interested in actually like trying to take a position on it would be sort of like in this area, where you're looking at basic trendline resistance, the consolidation resistance, and more importantly, that median line off the high. That would be an area I'd be looking for, a more concrete move. Does that make sense? Let's call this soft resistance here, but that would be the more critical range. And a stop against previous month's high would be a decent way to play it. But from here, if you just take the range just from the last 2 months, you're right slap in the middle. You know what I'm saying? He says, yeah, thanks, Mike. Much appreciated. Hey, my pleasure, John. Thanks for bringing this up. Again, I don't really pay attention to these sometimes. I need someone kind of bring me to focus on them, but slap in the middle of the range. Keep your eye on that formation. Chris, good to see you. Oh, it's Chris Hudson again. It says Sterling Dollar has a 200 MVA, 100% fib weekly pivot and 618 retracement, all at the same general area. If Euro Dollar reaches 100% with similar timing, have to like Sterling Dollar at least for a bounce. Let's go to that daily chart. Well, first of all, nothing has to do anything, so we have to be careful with that kind of solid expectation. But let me see where that 200 moving average is. Why is my 200-day moving average not here? Change that nasty color. Yeah. So look, Chris, when you have expectations like that, again, I'm not saying it's not going to happen. I just want to say one thing to keep in mind. He says absolutely right with that comment, but I'm just a guy out there. Language isn't as important for me. Wink. I hear you, Chris. But again, in your trading, again, I'm not even talking about the way you're talking. I'm just worried about we want to make sure that we're being objective. Here's one thing I would say. The 200-day moving average, sure, it's caught some lows. Sure, it's caught some pivots. But look, you've seen dips and breaks. You've seen consolidation. You've seen consolidation. So the one thing I would say is it's definitely a target. If I was putting out a scalp report right now, and in fact, if you look at my scalp, there's probably something right there at 53.30, but it's just a soft target. I wouldn't be looking to play anything off it because if you look back in price, we haven't seen that kind of definitive rejection or reversal off that region. That's the only thing that ever matters to me. Whenever anyone says anything, I just go back in price. Really? Has that happened before? And I don't have all that much conviction. I'd like to play a bias, meaning sub 200-day moving average, looking to play short scalps, above 200-day moving average from the swing to the upside, looking to play long scalps, sure. But actually using that level as a solid trigger or anything, I'd be mindful of. As far as the 100% fib and the weekly pivot, that's where it's a little bit more concrete for me. The confluence of them, sure, sounds great. I do like it. There's 53.38. It's a 618 of the advance as well. Yep, you had that on there too. So good observation, Chris. Love it. But just because those line up there, it does mean the market's going to move there, right? It would be a nice target if we do get some short triggers, but that's what we need first, short triggers. He says it's the confluence that makes this timing different, but I get what you were saying. All right, cool. As long as we're on the same page, Chris. But great observations. Yeah, there's a lot. I didn't even notice that all those line up there. Is the 100 off the high there too? Is that what you said? Let's tack that on. Mm, 100 off the high is a little bit lower. But that actually might be a decent extension to work with. I'm going to leave that on. Choke this up to 764. I bet you that'll be pretty close as well. Nice sort of padded zones of support here for the British pound. Sorry, a little bit of a lag here on my computer, but he says I don't have that 100 drawn. Use the previous swing. So you're using the larger encompassing swing. Sure. Whoops. Chris, when you say the shorter one, give me the dates of the highs and lows that you're using. I wouldn't get too granular. If you're doing something like this, that's like super granular. That's pretty much as low a time frame on the extensions I would get. An extension of this magnitude wouldn't really offer us too much of a tell because you're looking at a high that's only about what's that? Like 10 pips, 15 pips off that high. So it's basically the same retracement shifted down 10 pips. When you think about what the extension is, guys, all you're doing is measuring the initial wavelength off of that high. So whatever the retracement would be for this off that high is where those extensions are put. So if you're talking about a range that's pretty definitive as far as an equal high and equal low, the extension won't give you that much. So yeah, you're talking about the 11.2, 11.3. Okay, so 11.2 and 11.3 high. I see what you're talking about. So that's what I would be looking at ahead of the low that we just made. Okay, ahead of the low we just made. So once we came and made this low and recovered up back to the upside and even tested that high again, then we'd start to use the larger wave structure for that move. Within the compassing move here, you have sort of a very well-defined wave count. So we'll want to use this entire move within the confines of this to project the downside targets. Does that make sense? He says, I like it better. Well, again, as long as price is respecting the levels. That's all that matters to me. All right. Good discussion, Chris. Excuse me. Gary, great to see you in the room, says, guess which pair I'm talking about? I'm fed up, no pun intended. This pair won't go down or stay down. Bored, frustrated, your personal clue, the abomination. Please advise levels to watch. Many thanks. Sure thing, Gary. Here's what I'd be looking at with dollar yen. As I said, I just touched upon this earlier in the session. You know, the invalidation level was clear that we mapped out on Tuesday's update. That was right here. Once we broke 121, 121.50 is the next resistance target, but the major level is going to be 21.75 and 21.83. I know that swing trades are still looking lower from here, and so am I, but I can't discount the likelihood or the possibility for this thing to spike into 21.75, 21.80 before it recovers. Look, it's the 618 retracement of that massive August range spill. And it's the December highs from last year, which was basically, well, not basically, was the 2015 high. So there's a lot there. You even have a 100-day moving average sliding right in the middle. Get the marker for that. A 121.76. You know what I mean? So like, there's a lot there. So Chris, I can't make the assumption that because of all of these confluences are there that it's going to be a magnet, it's going to go up there. But I do know that our bearish invalidation level got taken out, and the momentum signature still looks kind of constructive here near term. So there's what the trade looks like, same levels on the broader picture here. So if we break through 121.50, that 21.73, 21.83 level is what I'd be looking at. It also happens to coincide now with basic slope resistance. So again, same trick we've been doing. Just basic support off the low. Has offered some nice pivots there. Pretty much caught these highs here. And that level coincides on that region into the close of the week. What would get me on the bearish side here? What would shift my attention back to the downside would be a break back below this median line here. And a momentum break, sub 50. You're basically looking for like this, guys. It's a 3-point trigger. That's good. Something to tip the scale. There's been divergence all along the highs. It's tired. It looks tired. I get it, but until we get that trigger, you got to sit on my hands. Gary, does that help on dollar yen? He says it does. Many thanks. Hey, you're more appreciated, or I appreciate that. You're welcome, sir. All right. Well, if there are no other questions from here, we will go ahead and wrap it up. Sorry, I'm a little off my game here, guys. Today, not feeling too well, but we'll be back on board tomorrow with some more fresh updates on what's going on. Keep your eyes on these Fed speeches later today. Again, someone's likely to say something stupid and make the dollar move, but in any event, the dollar index is coming to that region of near-term resistance. We'll want to keep an eye on that. The Aussie dollar, looking for possible reentry there. Here's the dollar index testing that 12.07 level as we open up U.S. markets in just a couple of seconds here. So watch for some near-term resistance. If this thing plows through this level and 70 breaks on the 30-minute close, I'd be looking again at that former basic trendline support, now resistance, to offer the next area. And in fact, if we bring up a 786 extension, that's where I'd be looking, right around 12,089. All right, best of luck trading, guys. I will see you tomorrow morning. Cheers.